If we actually do get these tariffs, I think we repeat what happened in April. I think we're going down in the stock market, we're going down in the bond market, and we're going down in the dollar, and we're going up in gold. In the meantime, people should be buying gold. They should be buying silver. I think we go up regardless of what happens. And I know a lot of people are still worried about buying gold and silver, right? There are people that are still waiting for a pullback. Oh, I don't want to buy $3,300 gold. I don't want to buy $36 silver. Well, if you don't want to buy $3,300 gold, be prepared to buy $3,600 gold or $4,000 gold.
With U.S. tariffs now impacting over 34% of Chinese imports and the Federal Reserve's rate decisions hanging in the balance, investors are turning to gold as both a refuge and an inflation hedge. Uncertainty is gold's friend. History shows that geopolitical friction consistently boosts gold demand. For instance, during the 2018 U.S.-China trade war, gold rose 14% in 6 months. Today, with tariffs now covering $1.2 trillion in global trade and no resolution in sight, the cycle is repeating. As CEO of Euro-Pacific Capital and a longtime advocate for sound money, PeterSchiff warns that Trump's tariffs could trigger April-like market turmoil, which will push gold higher. He advises investors to act swiftly, emphasizing that waiting for a pullback in gold and silver may be costly. While reflecting on the market, Schiff suggests the stock market keeps rising because investors no longer believe Trump's tariff threats. However, Schiff warns Trump's ego might push him to act just to prove he's not a chicken. This could trigger a market downturn if tariffs are imposed. Investors are evaluating the stock market's next move amid the consequential first 6 months of President Donald Trump's second term. In early July, following a strong second quarter, the S&P 500 and the Nasdaq Composite Index reached new highs. Markets then wavered as new tariff developments emerged. However, Schiff criticizes Trump's Big Beautiful Bill as a wasteful Keynesian stimulus that fuels spending but not real growth. He warns it will worsen inflation and deepen the economic bubble. Combining it with rate cuts, he says, will trigger severe Trumpflation. Economists, researchers, and analysts have warned that President Donald Trump's sweeping trade policy, which involves imposing steep tariffs on most goods entering the United States, will deliver a significant blow to consumers through higher prices. However, recent economic data has shown that overall inflation has remained fairly tame in the past few months. Before we dive into PeterSchiff's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
I think the only reason the stock market is still making new highs is because nobody believes him anymore. He's like, the boy who cried Tariff. People think it doesn't matter what Trump says, right? There's not going to be any tariffs. Maybe it's kind of like the Epstein files, right? Oh, I'm going to release them. Oh, they don't even exist. There's nothing to release. Don't even ask me about that topic. I can't believe you even care about this. Why are we still getting questions, right? He quickly transitioned out of Epstein, and maybe people think, well, the same thing's going to happen with the tariffs, right? He's talking about it. He's making a lot of noise, but at the end of the day, when it comes to tariffs, he is all bark and no bite. Well, I don't know. Trump's got an ego. I don't think he likes being called a taco. I don't think he likes being called a chicken, that he's chickening out. I remember if you ever watched, Back to the Future, but Marty didn't like being called chicken, right? And so he would do some crazy things if you called him chicken. Well, maybe he's a bit like Marty McFly. I don't think Donald Trump likes to be known as a chicken. And even though the market's tanked, the fact that they're not tanking now may, fool Trump into thinking that he can have these tariffs and see the market is going up. Even though I've announced these high tariffs, the market's still going up. He may not understand that the market's going up because nobody believes him, that everybody thinks he's going to chicken out. But again, he may just have to prove everybody how much courage he has, right? That he's not a chicken, and he may let these tariffs go into effect. And in that respect, the markets are playing literally a game of chicken. Because if Trump doesn't blink, if we actually do get these tariffs, I think we repeat what happened in April. I think we're going down in the stock market, we're going down in the bond market, and we're going down in the dollar, and we're going up in gold. In the meantime, people should be buying gold. They should be buying silver. I think we go up regardless of what happens. And I know a lot of people are still worried about buying gold and silver, right? There are people that are still waiting for a pullback. Oh, I don't want to buy $3,300 gold. I don't want to buy $36 silver. Well, if you don't want to buy $3,300 gold, be prepared to buy $3,600 gold or $4,000 gold, right? Because it's more likely to go up than down. I think we're near the bottom in both gold and silver. So don't press your luck. Don't hope for a big drop so you could buy more. Just buy more right now. And if you don't own any gold and silver, well, you better make sure and buy some right now. I think that the Democrats are going to have a much easier path to the White House if the economy is lousy and the Republican Party gets the blame. But what kind of Democrat? It could be the same type of Democrat that just won in New York. This could be a look at what's going to happen. You know, this is like the AOC, the Zarhan Mandani. He's like, AOC. I mean, she's ecstatic, right, about this outcome. Or Bernie Sanders, right? It's that wing of the Democratic Party. I mean, just like maybe Trump kind of redefined the Republican Party to some new populist brand. Well, what's populism in the Democratic Party is really a rebranded socialism. And I think that is where we're coming, or that's the direction that we're headed. And that is why people really need to prepare their portfolios now. You need to get more into gold and silver. You need to get into these foreign stocks, because all of this is going to be a disaster for the dollar. We got the Fed minutes that came out earlier today. And, you still have some of the Fed governors who are hesitant about cutting rates, but most of them still expect a couple of rate cuts between now and the end of the year. It should be obvious that rates need to go higher, especially now that the big, beautiful bill has been passed, because the big, beautiful bill is a massive Keynesian fiscal stimulus. It increases the deficits, but it's not in a way that increases economic growth. The Republicans are saying, oh, we're going to get more growth because of tax cuts. That's not the way it's going to work. Tax cuts promote growth if they promote savings and investment, because that's what grows the economy. Most of these tax cuts in the big, beautiful bill don't do that. They are targeted to increase spending, to increase consumption, put more money in the pockets of the middle class and the lower class, who are more likely to spend their money, right? And that increased spending doesn't grow the economy. It may grow the trade deficits. It may grow debt in general, but it's not going to mean we're going to have a larger economy that produces more stuff, because we're not getting more savings and more investment out of these tax cuts, because they simply leave more money in people's pockets to spend. But the government is not cutting back. See, if the government cut spending and we replaced government spending with private sector spending, that'd be great. But they're not doing that. The government isn't cutting spending. The government's going to spend more. So the government's going to spend more, and now the people are going to spend more because they're going to pay less in taxes. So everyone's going to be spending more, but we're not producing more. And so that's just more inflation. We're going to print more money. We're going to have a bigger bubble in this economy. But the problem is, I think the air is already coming out of this bubble, and a lot more is going to come out. But what the Fed should be doing is trying to counteract the big, beautiful bill, that Keynesian stimulus, with tighter monetary policy. The Fed is trying to claim, or Powell is saying, hey, the reason we're not cutting rates is because we're worried about the tariffs. That's not the reason not to cut rates. He should be more worried about the larger deficits produced by the big, beautiful bill. Those tax cuts are the reason that we need to hike rates. We need to offset the fiscal stimulus with a monetary sedative, right? If we're going to have looser monetary policy, looser fiscal policy, we need tighter monetary policy. But that's not what we're going to get. We're going to end up with loose fiscal policy and then a return to even looser monetary policy. That's an inflationary cocktail. And so if you thought Bidenflation was bad, wait till you get a load of Trumpflation, because that's going to be a whole lot worse.
Market specialist Peter Schiff argues that Trump's trade policies contradict free trade principles and ultimately harm U.S. consumers. He cites the Vietnam deal, where Vietnam dropped tariffs, but Trump raised them to 20 to 40%, exposing the lack of true reciprocity. Schiff stresses that Americans bear the cost of tariffs through higher prices, not foreign nations. According to Trump's July 2nd post, exports from Vietnam will face a 20% tariff, down from the 46% that was previously in effect, or a 40% tariff if they originate from a different country. In exchange, Vietnam will open their market to the United States, meaning that we will be able to sell our product into Vietnam at zero tariff, the president wrote. That sent shockwaves through Vietnam because their negotiators had not agreed to the 20% rate. They believed the tariff rate would be around 11%, according to the four people. U.S. President Donald Trump announced plans Thursday to impose blanket tariffs of 15% to 20% on most trading partners, downplaying concerns that additional tariffs could harm the stock market or fuel inflation. We're just going to say all of the remaining countries are going to pay, whether it's 20% or 15%. We'll work that out now, Trump told NBC News. Let's get back to the interview.
I think one of the most significant things that's been happening are the trade deals, right? The supposed trade deals that Donald Trump has been negotiating. Because as you remember, there was a 90-day pause after the reciprocal tariffs resulted in a crash in the stock and bond market of the dollar, a crash that stocks recovered from, bonds mostly recovered, and the dollar didn't recover at all. In fact, the dollar made new lows. But the reason that we got the recovery is because we got the pause. Trump called the tariffs off. And in fact, he earned the nickname of Taco, right? Trump always chickens out, Taco. And I think that the markets are expecting another helping of Taco because Trump has been announcing some very bad deals. The Nasdaq still finished at a new high today, right? The markets are still rising, despite the fact that we're now learning that the Liberation Day tariffs, the reciprocal tariffs, are coming back. I mean, they may not be quite as high as they were originally proposed, but they're almost there. And in some cases, they're higher. But they're much higher than what investors expected when they bought that dip. Now, the first sign of this happened last week, and I actually did a Twitter Spaces or X Spaces and discussed it, on Friday. But I talked about the Vietnam deal because that really shows where Trump is going, and it really exposes a lot of the BS that a lot of people were talking about when Trump first announced these tariffs. Because remember, there are a lot of free traders that normally wouldn't like tariffs. And so they had to justify what Trump was doing. One I recall was, Larry Kudlow. I was listening to him on his show on Fox Business, but he was saying, look, Trump's a free trader. Trump wants free trade. He's just going to leverage these tariffs. He's coming up with a high tariff, hoping that other countries will drop their tariffs to zero. And then we'll reciprocate and do the same thing, right? They tariff us zero, we tariff them zero, because supposedly these high tariffs were there to reciprocate the high tariffs that other countries had on us. Except they didn't have high tariffs on us. They were all make-believe. But people thought, well, if other countries go to zero, well, maybe we'll go to zero. Well, that's exactly what Vietnam did. Vietnam dropped their tariffs on U.S. imports basically to zero. Now, they weren't very high before. I think they were still less than 10%. I mean, so they were there. I mean, 9-10% isn't nothing, but it's certainly not, a big wall of protectionism that's going to keep our products out of their markets, right? But there were some tariffs. Well, Vietnam said, okay, Trump, we'll go down to zero. Now, what did Donald Trump do? Did Donald Trump say, great, that's exactly what I wanted. Now we're going to go to zero too, and we're going to have free trade? No, that's not what Trump did. Trump raised tariffs on Vietnam to 20%, hardly zero. And that's higher, much higher than the tariffs were on Vietnamese imports before Liberation Day And if it turns out that goods came through Vietnam via China, so China sends goods to Vietnam and then Vietnam re-exports them to us, that's going to be a 40% tariff. Now, I'm not really sure how we, prove that what we're getting from Vietnam originated in China. So maybe there'll be some cheating to get the lower tariff. But we're going to be paying 20 to 40% tariffs. That's not zero. That's not free trade. So, Vietnam lived up to its end of the bargain and we did not. Now, of course, Trump is touting this as this big win, because when you hear the way he presented it on Truth Social and the way he talks to the media, he said they're going to be paying 20 to 40% tariffs and we're not paying any tariffs. But he's got it backwards. They're not paying our 20 to 40% tariffs. We're paying those tariffs. The Vietnamese are paying no tariffs because their government lowered their tariffs to zero. So as a result of this negotiation where we supposedly came out on top, the Vietnamese get to buy American products and their government is not going to tax them for doing that. So our products are now cheaper for the Vietnamese. That sounds like a win for them, right? If I was in Vietnam and the government said, hey, guess what? If you want to buy stuff from America, it's now cheaper. Oh, that's good. Now I have extra money to buy something else, right? Because I didn't have to spend as much on that American product. On the other hand, Americans are now being told everything you buy from Vietnam is going to be maybe 20 to 40% more expensive. Now, sure, the business may not pass along 100% of that tariff. Maybe the business will eat some of it and take a lower profit. Who knows? But Americans are going to be paying these tariffs. So we lost the deal. It's not a good deal for us. It's a rotten deal for us. I mean, maybe in Donald Trump's mind, it's a great deal because he gets to pretend that we won something, because he gets to pretend that Vietnam is paying these tariffs when they're not. We're paying the tariffs. But more important, it proves that the whole idea that we were trying to be sold, that Trump's real goal was a level playing field of zero tariffs, is complete BS. And in fact, more proof of that was just announced earlier today. Donald Trump announced that we're going to have 50% tariffs on Brazilian imports. We don't even have a trade deficit with Brazil. I didn't even realize that, but we have a small surplus with Brazil. But now we want to make Americans pay a 50% tariff to buy Brazilian products. And Trump said that we're going to do this for political reasons.
In an era of trade wars, fiscal fragility, and central bank caution, gold is no longer just a haven. It's a necessity. With technical and fundamental forces aligned, the path to $3,500 is clear. Investors ignoring this rally risk missing one of the decade's most compelling opportunities. As gold gains momentum and tariffs loom large, will investors pivot in time, or will political miscalculations lead to the next major market correction? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.